Peter Thiel was prepared to take on the conventional corporate world when he had $1,700 in a tax-free retirement savings account. 2 decades later, he would invest that money to grow it into $5 billion. This is the tale of Peter Thiel and his biggest investment strategy. Born in 1967 in Frankfurt, Germany, he emigrated to the U.S. with his family. He was not only a chess master, but also an outstanding student and math prodigy. Before graduating, he was also named valedictorian of his class. He earned a philosophy degree from Stanford University in 1989 and left his job in New York in 1996 to launch his hedge fund in California. By the end of his fundraising campaign, he had successfully raised $1 million from his friends and family. Shortly after starting his new hedge fund, Peter met a man named Max, and this is where his life took a sudden turn. His new hedge fund was named Thiel Capital. Max had an idea, and Peter thought the concept had tremendous potential and eventually wanted to join the founding team. This is where they started FieldLink. After starting the company, hiring several people, and making a few minor changes, Peter and the other co-founders changed the name of FieldLink to Confinity. In March of 2000, Confinity merged with X.com, another financial services provider founded by Elon Musk. Then, why did Peter decide to merge? According to him, competition is for losers. The merger of these two organizations eventually led to the creation of PayPal. Due to disagreements between Elon Musk and Bill Harris regarding the direction of financial services, Bill left the company and Elon took over as CEO. Despite this upheaval, things did not go well. In October, Musk started to concentrate the company's efforts on PayPal. That same month, Musk was abruptly ousted as CEO and replaced by Peter Thiel. As the new CEO, Peter took PayPal public in 2002, when PayPal was later acquired by eBay for $1.5 billion that same year. The majority of Peter's PayPal gains were in his Roth IRA, a retirement brokerage account where users pay taxes on their capital before depositing and never have to pay taxes on their capital gains. Using his Roth IRA, Peter bought 1.7 million PayPal shares for a tenth of a penny. At the time of the acquisition by eBay, the price per share was around $22. Peter was able to profit from the deal thanks to his equity, making him an instant tech millionaire. Peter's Roth IRA was worth about $37 million after selling PayPal. Peter started a hedge fund called CLARIUM Capital after selling PayPal. Through CLARIUM, he researched macroeconomic trends and placed sizable bets on them. The fund's performance was impressive at first. Peter successfully predicted the devaluation of the dollar in 2003, which enabled him to profit 65.6% in his hedge fund that year. These returns have continued to fluctuate with extreme volatility ever since. About a year after starting CLARIUM, Peter co-founded Palantir Technologies with a friend he met while attending Stanford Law School. Palantir's business model was straightforward, but no one in Silicon Valley wanted to invest in it. Peter explains that he basically believed that some of the strategies PayPal had employed to combat fraud could be applied to other situations, such as countering terrorism, while still managing to complete more work while running operations at Palantir and CLARIUM. Peter invested in Facebook for the first time in August 2004 and eventually sold 80 of his angel shares for more than $400 million at a price of $20 per share. He held a 10.2% stake in the company. This enhanced his reputation as a startup investor. Later in 2005, Peter founded the Founders Fund in 2005. Over the following 6 years, the fund expanded thanks to successful startup investments, one of which included a sizable investment in the company Peter founded, Palantir. Major investors withdrew their money in 2011 because Peter missed out on a significant stock market rebound. As a result, he was forced to close the fund and concentrate solely on managing his own money. Peter generated an average return of 15.3% per year from 2002 to 2010, a very impressive return. Peter outperformed the S&P 500 by an astonishing 12 per year on average during that time period. Peter was successful not only in the hedge fund industry but also in venture capital, entrepreneurship, and public equity investing. From 2010 to the present, Peter was successful in accelerating his capital growth. Peter successfully aided Palantir in expanding to become one of the biggest AI-based businesses in the world. Palantir's revenue increased from $2 million in 2008 to over $1 billion in 2020, and this might be only the beginning of what is to come. Overall, at the age of 53, Peter is only beginning his journey at becoming one of the greatest investors in history. Many believe that the 294 million% return he compounded was the highest ever recorded. So that was Peter Thiel for you. We hope this video was helpful. Leave a like on the video if you did enjoy it, and subscribe to the channel if you haven't already. We'll see you in the next one, and until then, happy investing.